I'm Asher Pratic. I'm head of enterprise strategy at Citizens Bank, and you're watching Clicking Stop.
And so they're putting fuel on that.
2 minutes to go into the close here on this Fed day. We are looking at the tail of the tape, finishing right about at session lows for the S&P, the Dow, the NYSE Composite Index, as well as the small caps, the Russell 2000 at this hour down 1.6%. Peter Tuchman is the Einstein of Wall Street. Okay, we got all 11 sectors in negative territory, 28 of 30 Dow components in negative territory. What's going on today after Mr. Powell's press conference?
I don't think he caught anybody by surprise, but as you listened to him speak, it sounded to me that a Fed cut would have been in order. As far as I'm concerned, I don't know what we know. We don't know so much. There's so many moving parts to this story, especially with the war going on and all that. But net, basically, I saw a cut coming. I know there was no probability it was going to happen. But you know what? I think people are sort of fearful that without that cut, he kept saying that if the economy is doing better, we're going to then cut. My gut is that when the economy is faltering a little bit, that's when we cut. So I kind of thought it was a bit of a paradox as far as I'm concerned. But you know what? What we also do, we have an S&P rebalance on Friday, the largest ever first quarter rebalance, $112 billion worth of stock is coming into the marketplace. And so what you have is when you have a Fed day like today with some sell side, it's going to escalate the sell side fury. It's just like pouring a little bit of gas on the fire. Tomorrow's the day to watch. The follow through after Fed day is the day to watch for real conviction.
Thank you, Peter Tuchman, Einstein of Wall Street. Hayward here doing the bell. We had so much green on the big board yesterday for St. Paddy's Day. It seems like a distant memory at this point on this Fed Day, Wednesday, March 8th. The S&P 500 down almost 1.4%. The Dow 30 component selling off 1.6%. The New York Stock Exchange Composite Index down 1.4%. The small caps down 1.6%. As we talked about there with Einstein a moment ago, the FOMC holding interest rates unchanged despite the surge in energy prices. Jay Powell telling reporters at his 2:30 press conference, consumer spending remains resilient, but there's still far too many unanswered questions about how the geopolitics in Iran and the Middle East will play itself out and what that means for U.S. consumers. He did say the upside risk to inflation remains, as does the downside risk to inflation. And of course, as to be expected, Stephen Myron, the president's pick to the Fed, the sole dissenter, he was, of course, yet again in favor of a short-term interest rate cut of 25 points. With now, when you take the step out and you look at all 2026, maybe, just maybe, we get one cut now on the table. Investors reacting as such. Let's bring in our first guest of the broadcast. Kelly Kowalski joins the show now. She is head of investment strategy at Mass Mutual. It's great to have you here for Fed Day.
Hey, JD, thanks for having me.
Of course, it's really nice. Unfortunately, you and I wore our shades of red and pink, and there's lots of red on the big board. Is this the market reaction you had expected after not just Jerome Powell, really the FOMC's announcement, but then additional commentary from the chairman?
Yeah, look, the day didn't start off great, right? We had a hot CPI print, we had developments in the Middle East, and then the press conference wasn't what investors wanted to hear, right? We liked seeing that one cut still in the dot plot, but if you listen closely to his comments, there's a high bar for that cut if it comes this year. On the positive side, the Fed seems to have some confidence in the economy, right? They revised up growth, they kept unemployment steady. I'll take that.
Yeah, of course, because we did get a dot plot, the summary of economic projections. We only get these 4 FOMC meetings a year, and they give us some sense, not that what the Fed always thinks is going to happen necessarily happens. In fact, it rarely does. I want to get your take on this. He did say he would stay on and serve as chairman pro temp until Kevin Warsh is concerned. I don't remember the Fed ever being this political. How are you thinking about some of the palace intrigue behind the Fed, which is probably top of mind for a lot of investors as well?
It is top of mind for investors. I think there was always a chance that he may stay on, and if he does stay on, that's sort of how it goes. But I think more importantly, it's looking towards Warsh, who is ultimately going to be chair, and what that means. And I think you still have several members, despite what Warsh, may want to cut or maybe a little bit more dovish, he's got to convince 6 other people.
Kelly, I wonder, yeah, right, it's the C in FOMC stands for committee, doesn't stand for chairman.
Exactly.
I try to remind people of that. I want to get your take on Treasury yields, the 10-year moving up 6 basis points, 427, elevated for the 10-year, elevated for most of the curve in reaction to the announcement today. What's on your radar for yields and how they may move the rest of 2026?
Yeah, so 10-year has moved up, but it's still within the range that it's been over the past several months, right? We've been kind of watching this 4 to 4.5, 4.6. I think what'll be really key is if we see a breakout out of that range, because that's what could cause some further discomfort to equity markets, right? If you see growth hold up, if you see, some hot inflation prints, which, hey, it looks like we might with oil prices where they are, we could see, further pressure on treasury yields this year, which I think has caught the market by surprise. There was steepening expected. The exact opposite has happened. We've seen flattening this year.
Kelly, some of the most dominant investment themes that you think are shaping portfolios and will continue to shape investors' portfolios between now and the end of the year?
Well, I want to believe that Iran is the last geopolitical shock that we see this year, but I don't think that'll be the case. So I think we got to be prepared for more geopolitical noise, more political noise, especially as we enter a midterm election year. Another sort of theme that we're seeing is Halo, the Halo trade, which is hard asset, low obsolescence. We've been hearing a lot about the SaaS apocalypse, this trend towards, durable hard assets. Energy was outperforming even before the Iran crisis. So, what does that tell you? I think we'll see that. And along those lines, AI is going to be a theme, both how are companies investing in it and what's it going to disrupt?
Yeah, of course. We saw that big software SaaS apocalypse level soft. We kind of went sector by sector, and that was kind of before the Iran strikes. That's sort of an old running narrative that may reemerge at any point. Kelly Kowalski, head of investment strategy at Mass Mutual. Really great to have you here. Come back anytime.
Yeah, thank you.
Nice to have you. Skylar will grab your mic. Howard, you and I will head this way. We're bringing the latest analyst calls here on this Fed day that crossed the tape before the opening auction here on Wall Street this morning. First up, RBC downgrading Starbucks to sector perform. They say the turnaround story with Starbucks taking a little bit longer than had been expected. Starbucks now down 5 days in a row, but up 12% in 2026. Next up, Citi upgrading Constellation Brands to buy from neutral, forecasting beer sales to show top-line acceleration. STC up 10% year to date. Finally, Citi reinstating Netflix as a buy. They say, hey, we see a whole host of positive catalysts ahead, including U.S. price hikes. Maybe not good for you and me, the consumer, but good for Netflix's bottom line, as well as larger share purchases. Shares of Netflix down flat, or about flat to the downside here year to date. Howard, to look at two NYSE notables. We'll start with the House of Mouse, down about 0.9%. Guggenheim analysts lowering their price target from 140 down to 115 on the stock as they reassess their valuation metrics and the path forward. They do say, however, hey, we're pretty bullish on new CEO Josh D'Amaro. Today is Josh D'Amaro's first official day on the gig. Shares of Disney down 11% from the start of the year. Howard will swing along this way. We'll take a look at WSM. This is Williams-Sonoma, one of the stronger performers in the S&P, at least after the opening auction today. Still finished up about 1%. Reporting this morning a miss on revenue, but a beat on the bottom line earnings, raising their quarterly cash dividend by 15%. Shares of Williams-Sonoma up 4% since the start of 2026. FinTech TV's lead anchor, their very own Remy Blair, sat down with Todd Son of Strategis Asset Management. They discussed everything you need to know about the state of the financial sector and much more. Take a look.
Well, joining me to weigh in this morning is Todd Sohn, Chief ETF Strategist and Managing Director at Strategis Asset Management. Good morning, Todd. Thank you so much for joining me. So there are a lot of headlines, a lot of moving parts, but if we look at the financial sector in terms of the S&P 500, it is the weakest performing sector, and we are looking at a pullback of over 11%. So I understand that economically sensitive areas like banks and the Mag 7 are screening as oversold. What does this tell you about the broader market's next move?
Yeah, Remy, great to be with you. I think investors ought to pay very close attention to how the banks, insurance, private asset managers, and the Mag 7 all behave over this next coming week. They're among the oversold areas in our work, not deep oversold, but enough to catch our interest. And in a tactical sense, when you have a group so important to the American economy, right? The Mag 7 companies are a major influence in the indices. The financials are the plumbing of all the indices. Their inability to show some sort of risk appetite here is going to suggest that the markets are on weaker footing than we may think, despite only being 3 to 5% off the all-time highs. So I think it's really much a fight or flight moment for the financials. I don't want to get too negative here, but I think we're at a pretty interesting inflection point on the market and how they reflect these areas.
Yeah, and we're keeping a close eye on financial ETFs. So, what are the flows telling you right now? And tell us about the large cap banks and why you think they're masking the weakness that is happening below the surface.
Yeah, so we look at ETF flows as a temperature barometer, right, on how investors look at certain groups. So on one hand, we've seen a lot of money chase industrials as they have worked. And on the other, there's a pretty good move away from financials. I think there's concern there about how this private credit weakness might spread. Now, on the banks, they're the largest group within the financials, and indices tend to lie. They can be skewed by mega cap names, especially in a trillion-dollar world. So we've seen that from JP Morgan, Wells Fargo, Bank of America, et cetera. They have masked a lot of the weakness from those private asset managers, from some of the insurance names, the regional banks and whatnot. So I think this is a great time to look under the hood, specifically in the financial space, to understand how widespread some of these issues might actually be. And you're starting to see it show up in corporate spreads too. We have high yield and investment grades ever so slightly widening out. And that's usually how more stressful environments begin when these things, they were in their bottom decile. They can't stay there too long. I think that what is happening in financials is a reflection of that.
Yeah, and I do want to get your take on what the data is telling you. So, financial ETF trading volume is surging, and I understand that historically this points to a major macro event. So, what stress point is driving the behavior that we're seeing today?
Yeah, it's interesting. Whenever you see the financials ETF volumes start to really accelerate and spike, it's usually because there is some sort of event, as you've mentioned, ongoing. Whether it's bullish or bearish depends on the context of the financial backdrop. You've seen it in elections, if we saw it during COVID, during the regional bank bailout a few years ago, and now a big acceleration probably because of all the private credit weakness. And so I would be on guard. We're seeing more volatile headlines, right? We've seen plenty of companies start to gate redemptions on their private credit funds. I think what you're seeing in the financials is an exhibit of that. And I would also tell you, I think just be on guard for a little bit more volatility. Get more defensive if you can in portfolios. Take a look at low volatility. Take a look at managed futures, which can help cushion the blow if equities continue to falter. It is a great time to diversify and consider alternatives, especially if the financial landscape continues to deteriorate.
Well, Todd, we will have to leave it there for today, but thank you so much for joining us on this Friday morning. And as always, thank you so much for sharing all of your insights.
Take care.
Welcome back to the show on this Wednesday edition of Taking Stock. Our next guest joins us now down here on the trading floor at the FinTech TV booth. Kevin Halloran, President, CEO, Director of Hayward Holdings. Fresh off the podium, ringing the closing bell too. Nice to have you down here.
Great to be here. Thanks for having me.
Talk to me all about what brings you and the team from Hayward back down here onto the floor of the big board today.
Yeah, we're celebrating our 5-year anniversary. So 5 years and just a few days ago, we had the opportunity to list back in March of 2021. So to commemorate that, we're having a board meeting here at the exchange. We're also celebrating, we just came off in 2025 our 100-year anniversary as a company. So we brought some employees back who are long tenured, just to tip our cap to them that they were really the ones who laid the foundation that ultimately led to us becoming a publicly traded company back in 2021. So wonderful day to be here.
Kevin, give me a bit more of a primer, more of an intro to your work at Hayward for anyone who might have only loose familiarity with the name and may not fully grasp, especially your top priorities here in 2026.
Yeah, so 2025 we finished with a lot of momentum, so we're really encouraged by how things are starting in 2026 for us. We're we're a manufacturer of equipment that people use to power their pools, pumps, filters, cleaners, automation, and whatnot. So new construction certainly benefits our industry, but our installed base is really what makes our industry grow. And we're really excited to bring some great new products to the market that helps the pool professionals really create that backyard oasis where families gather, where memories are made, and where wellness is nurtured. So we're really excited to continue that journey now in our 5th year as a public company and 101st as a company.
So I'm interested with the timeline of the last 5 years. You're coming right out of the depths of the COVID pandemic, and I wonder in what ways the business has had to stay the same over the last 5 years, and has this 5-year time horizon gone as you had expected it? And in what ways have maybe things changed, maybe taken a bit of an unexpected turn in the last 5 years?
Yeah, the last 5 years, it's certainly been a whirlwind. When we listed, we were still sort of in the throes of COVID, and pools were extremely popular back then. Our industry had a tough time satisfying the demand that existed out there. There's been a bit of a recovery. There's been some headwind around new construction and interest rates and inflation and whatnot. But the secular trend is still people want to lead healthy outdoor lives, and the best way to do that is to have that oasis in your backyard. So it's been a fun ride.
Kevin, I tell you, I live in a 5th floor walk up in Queens, New York. I dream of the day where I get to have a pool and have some of these issues. Before I let you go, quickly, ways you're incorporating artificial intelligence into your business. I wouldn't be doing my job if I didn't ask.
Yeah, great question. It's certainly a popular question. We're primarily, I'd say, where we think we're setting the tone within our industry is around the customer service side. We've employed a number of AI agents into our call center, thus reducing resolution time and call time. There's a lot of other opportunities, but that's one that I'd say we made the most progress on over the last couple of years.
Kevin Halloran, congratulations really on the century mark, but especially the last 5 years here in the NYSE family. Kevin, President, CEO, Director of Hayward Holdings. Come back anytime. Nice to see you.
Great, thank you. Great to be here.
Don't go anywhere. A lot more Taking Stock coming up after this. Let's rock and roll. Time for a few fintech, crypto, and artificial intelligence headlines at this hour from the big board on your Wednesday. First up, Bitcoin down 4%, trading right around 70,759. A bit of downward pressure on the crypto majors in response to Jerome Powell's press conference. ETH down 6.2, Solana down 5.8. Next up, U.S. Senator Tim Scott of South Carolina. He says a new draft of the long-awaited crypto market structure bill could land, he says, as soon as this week. Signals progress as lawmakers hammer out stablecoin rules and overall DeFi oversight. And finally, the SEC putting a stake in the ground, rolling out its first ever crypto framework that says most tokens are not in fact securities, as regulators team up to bring clarity to the digital asset boom. We now bring you part two of my one-on-one sit-down, which we did last week at the New York Stock Exchange with Bobby Young. He is the co-founder and CEO of CoinGecko. We talked all about the state of the Clarity Act, his year-end price target for Bitcoin, and much more. Take a look. Joining us now for a one-on-one interview here at the balcony of the New York Stock Exchange, Bobby Young, CEO and co-founder at CoinGecko. Thanks for joining us. Good to have you here.
Good to have you.
If you had to invest $1,000 into the crypto ecosystem right now, how would you divvy it up?
Yeah, I'll probably go to the standard one, Bitcoin mostly. And then you have the major Ethereum, Solana. And I think increasingly a lot of people are looking at the HYPE token. It's like a perpetual decentralized exchange market. And that's one of the interesting tokens out there.
The HYPE token?
Yeah.
What do people like about it?
Hyperliquid is pub DEX. And a lot of trading is happening on this thing, and it's trading a lot of real world assets. I think one of the interesting things is it starts tracking tokens like tokenized gold, oil, and so on. And it has its market is open 24/7, and there's a lot of volume happening even during the weekend. And then it's tracking the price action. The price action is tracking the action in the Iranian war, for example, for the oil market.
We are expecting a new incoming Fed chair, Kevin Warsh, down in Washington, and we are expecting him to be more dovish. At least the president would like him to be more dovish. What are your expectations for the impact of central bank policy on the crypto majors and how they may perform, even, let's say, between now and the end of 2026?
Yeah, I think the new incoming Fed chair will be more dovish, and will be kind of will reduce interest rate or has a lot of expectation. Obviously, with the Iranian war and oil prices going up, it's going to be a tricky balancing act. But I mean, a lowering interest rate will be good, supportive of crypto price appreciation. And that's kind of what my baseline expectation is, that interest rates going to get cut and price going to do well for Bitcoin and cryptos.
I want to get your take on something that happened just within the last few days. We heard from Treasury Secretary Scott Bessent. He said to increase the global reach of existing supply, U.S. Treasuries provide a temporary authorization to permit countries to purchase Russian oil currently stranded at sea, part of the administration's effort to try and increase supply, keep prices low. We actually saw Bitcoin and some of the crypto majors jump on a news item like that. Is that a surprise as the administration's trying to figure out its way through the broader conflict in the Middle East, that we do have the Bitcoin response we've had these early days?
Yeah, I think Bitcoin in general kind of lead the market, and I mean, especially during weekends when the markets are closed. So I mean, we had like 3, 4, 5 months of pretty rough action for the Bitcoin market. I think it's kind of done, and then moving forward, I think it's going to be good as well.
I want to get your take on the Clarity Act, everything from defining finally what is a security, what's a commodity, anti-money laundering, provisions for DeFi protocols. As of now, it's got the support of the White House, passed the House, it's kind of caught up in the Senate. What is your expectation for the timeline if it passes? And if so, what are you most looking forward to that it will finally be able to do?
Yeah, I think what's important is this industry needs clarity on what it can or cannot do. And for the longest time under the previous administration, there was no rules, no clarity on what you can do, and then everybody's kind of hamstrung on what you can do. I think the Genius Act passing was a fantastic piece of regulation that now that's what we're seeing with all the growth of stablecoins. I think the Clarity Act, there's a lot of horse trading going around right now. It's probably just a matter of time, probably by mid-year or so, hopefully it gets passed. I don't know. But I think once that passes, then it's a very bullish thing, because then it's clearly defined what you can or cannot do, and then people can start building on top of it. So yeah, I'm excited for this, and then we start seeing all the institutions coming in and playing in this space. Before this, they can't really play because they can't do it.
Bobby, what is one reality of the crypto landscape that you wish more crypto users better understood?
Yeah, I wish everybody pay more attention towards security. It's one of those things where crypto is very self-custodial, and you kind of have to be responsible for the coins that you control. And if you're not careful, a lot of people, I've seen too many cases of people losing their coins for not having good hygiene, good security hygiene. So I wish a lot more people pay more attention to kind of upskill themselves how to take care of their wallet security better.
Base case or prediction for where Bitcoin or any other crypto major will be trading by the end of 2026?
Yeah, I think it won't surprise me for Bitcoin to hit 150K by the end of the year, early 2026.
150K by the end of this year?
Yeah.
What are the main catalysts? Is it the passing of Clarity, among other things?
Yeah, passing of Clarity, That's the end of year election, mid-year election as well. So, interest rates probably going to go down as well. So the Iranian war is probably not going to last too long as well. So all these bullish catalysts, we're seeing like peak bear sentiment right now, but I think things will improve.
Bobby Ong, CEO, co-founder at CoinGecko. I apologize for throwing my pen at you halfway through the interview. You're a total pro. Thank you for visiting us here at the New York Stock Exchange amidst your many travels. Great to have you.
Thank you. Good to see you here.
Welcome back to the show. And now Money 2020's very own Scarlett Sieber is back with a whole new edition of Jargon Translator, putting complicated fintech terminology into day-to-day language that anyone, even me, can understand. Take a look.
Welcome back. I'm Scarlett Sieber from Money 2020, and this is Jargon Translator, where we take the terms you hear on CNBC and turn them into something that doesn't require a decoder ring, because there's a lot of terms floating around. Ever wonder who sees your trade before it hits the market? That's order flow, and it is worth a fortune. Today's term? You guessed it, order flow. Order flow is simply the stream of buy and sell orders moving through the market. It's how brokers know what investors want, how market makers set prices, and how trades actually get matched. Think of it like traffic patterns, except instead of cars, it's money deciding where to go. Here's the twist. Order flow is valuable, really valuable. That's why brokers sometimes sell it to market makers who use it to price trades, manage inventory, and yes, make money on the spreads. This is where you may have heard the term payment for order flow. That's when a market maker pays a broker for the right to execute your trade. If it sounds controversial, well, it is. But it is also how many commission-free trading apps keep their lights on. Order flow helps markets know what's coming, where demand is building, and where prices might move next. In a world of algorithms, it's the closest thing to reading the room. Order flow, the heartbeat of trading, quiet, constant, and incredibly valuable. And that is it for today, your Jargon Translated. Have a term you want us to break down? Drop it in the comments below, and it just might make the cut. Back over to you.
Welcome back to the show. Final tail of the tape on this Wednesday, March 18th, Fed Day. The S&P 500 down 1.3%. The Dow 30 components down 1.6%. The NYSE Composite Index down 1.4, and the small caps, the Russell 2000, down 1.6% on the day. Micron shares also moving lower after reporting quarterly results a few moments ago. Tomorrow here on Wall Street, as we get every Thursday morning, the latest on initial jobless claims. In the morning, we'll get quarterly results from Alibaba, Darden Restaurants, and after the close, the latest from FedEx, as well as from Planet Labs. On this Fed Day, what a day it was here for Wall Street. Thank you, as always, for taking the time to watch today's special Fed Day Jerome Powell edition of Taking Stock. Have a good Wednesday night. We'll see you again tomorrow from the big board.